measures that the Commission has evaluated in relation to measures in the banking industry. Both of these were all three, Chair, not both, all three were approved, and in relation to the last one, the other two were approved without condition, and the last one was approved with condition, including public interest conditions, Chair. And Chair, I think in relation to this, to here, it's important to note that this is where, in relation to HDP, and I will speak about that more broadly when I come to advocacy role, that we do, when we approve measures on conditions, that in some instances we have created funds as conditions in those measures. We've done that in a number of measures where those funds are then used for purposes of funding and funding HDP firms in particular, and SMEs firms to enable them to gain entry into various markets. And I will talk about that a little bit more, Chair, when I come to our advocacy role. And this we've done even in market inquiries as well, Chair. Chair, in relation to advocacy work, we are a member of working groups related to fintech, which also comprise other regulators in the finance sector. And these include the South African Reserve Bank, the National Treasury, the Financial Sector Conduct Authority, the Prudential Authority, the National Credit Regulator, the National Consumer Commission, and SARS. The first one, Chair, is the Intergovernmental FinTech Open Finance Working Group. And here, Chair, what we have done is a paper on regulating for a competitive and inclusive open finance regime that we will be submitting, I think, at the end of Feb 2025. And what it does is to unpack competition aspect of open finance. It will then be consolidated in a report for publication by the working group and submission to the National Treasury by 2025 to support a policy direction for open finance. The second one is the crypto asset regulatory working group, which is in the process of approving for publication now in November, Chair, a position paper on crypto assets recommendation and stable coins. We have already, I think, made a submission to the working group on this, Chair, and what the competition issues are in relation to it. In addition, Chair, we do conclude MOIs with various regulators, and here we have with the Financial Sector Conduct Authority. We have had various advocacy engagement with the national payment system within the SARB around the payment system, and we continue to intervene, as I've stated earlier, on panels with banks and insurers on their panels to ensure that there is open opportunities for SMEs and historically disadvantaged persons. Chair, the one issue I wanted to also add here in relation to funding for HDPs and SMEs, Chair, is that in the work that we have done through measures, and I've touched on it a little bit here, Chair, we have had conditions that we provide on establishment of funds by merging parties that are targeted at providing funding to HDP and SME firms to participate in the markets. And this is over and above supplier development funds, but these would be in a form of enterprise development funds. And we have done that through a number of measures, Chair, and we continue to work on it. In fact, recently, Chair, and we will share with the committee, our advocacy division did an assessment on how these funds work once they have been implemented, looking at some of the funds that we have done. Also, through our market inquiries, Chair, on the online intermediation platform Market Inquiry, and recently from the Fresh Produce Market Inquiry, there has been concerns by HDP and SME funds in those markets about lack of funding that they face in those markets to enable them to enter or to even expand and thus compete effectively in those markets. In both of these market inquiries, we have made recommendations to government on how to deal with funding or the creation of funding, either through venture capital funding or through mandates that government needs to provide when they create funding that are operated by others, to ensure that in those mandates there is specific mandates to ensure that funding moves more broadly to HDPs and SMEs, Chair. And we're happy to share some of those recommendations, both from the online intermediation platform Market Inquiry and in the provisional report of the Fresh Produce Market Inquiry. Lastly, Chair, in conclusion, as we note, Chair, the banking, the finance sector more broadly, and banking is a priority sector in the Commission in our current strategy cycle, and we continue to do work in the sector and continue to follow up on some of the interventions we're doing, including through advocacy role, Chair. That we continue to do, particularly working with some of the regulators in the sector. I thank you, Chair, and we look forward to the questions that will come. Thank you, Chair.
Thank you very much. That was very elaborate engagement. Andre and the other secretary will then help me specifically when members of the committee are raising issues through the show of hands. And then the colleagues from IDC or an NEF, if they also wish to participate in the debate, will also allow them to just make their points. But our focus as the portfolio committee will be on these three presentations in the main, so that we're able to. Supposed to be time the next 4 minutes. Those of you who want to step out and just see from your office, you may do so quietly, and we're able out from members of the.
Chair, you were breaking, Chair, so we couldn't clearly hear you, what you were saying, Chair.
I was saying that I'm going to be taking hands now. Those who want to take tea,
okay.
Yeah, they can have small tea.
Okay.
I said of member Tring and then member Msezane.
Msezane is two members of Mr. Van Rooyen, Chair.
Mr. Van Rooyen. So there are 3 hands for now.
Yes, Chair.
Okay. Member Tring. And then
Mr. Beasley, Chair.
Member Beasley and Member Chance.
Yeah.
Member Sikwati will follow in that. You'll remind me so that we don't mess up the order in case, colleagues. Over to you, Member Tring.
Thank you, Chair. Chair, firstly, want to appreciate the presentations. Chair, I think that with regards to the NCA, the National Credit Act, and COFI, I think one needs to welcome these regulations. But my question with regards to these regulations is rather what recourse is there if there are any violations, either on the lender's side or the one who's receiving the income and the one who gives the income. So it's from the creditor as well as the one who receives. So what kind of recourse is there if there are any violations? And then secondly, noting that many of our municipalities are actually in distress, some 50% according to the Auditor General, close to 50% of our municipalities. What remedies are there to, just in terms of development finance, because this serves as an impediment to development finance when you have all of these municipalities that are in distress. So I'm just interested to find what kind of remedies are there to address the challenges that the municipalities are facing, and to correct the financial issues that municipalities have, because this affects on service delivery and industrial growth at a local government level. Then, Chair, just in terms of the statistics expert, Ngoako Mabeba, I think it is. And my apologies if I haven't pronounced your surname correctly. But he indicated that with regards to development credit that is granted, we've seen a decline. Actually, there's been a decline since the fourth quarter of 2022. And normally there's an increase from the first quarter. But since the fourth quarter of 2022, there's been a decrease where the development credit granted is currently in 24 almost negligible. And so what is being done to rectify that? Chair, just a question with regards to the Competition Commission and the fixing of the rand. There are many who feel that your banks in particular got away with a slap on the wrist, and so what measures are in place to ensure that banks are held accountable and that we do not have the banks speculating with our currency, causing the rand to increase and to weaken, and that obviously places a huge strain on our economy as well as on the ordinary citizen, just with regards to increase in inflation, particularly on our imports. So I think with regards to the rand fixing and that particular saga, I haven't heard anything from the Competition Commission, just with regards to dealing with the banks and to prevent such a recurrence. The newspapers reported that there was one or two banks that agreed to cooperate with the Competition Commission, which in essence meant that there was indeed some kind of collusion that took place with the banks. And then finally, Chair, with the NEF and the IDC, and this is perhaps to the NCR mandate, the mandate which is to develop an accessible credit market, and I suppose that is to all South Africans, developing an accessible credit market. Now, the NEF and the IDC to a large extent look at investment in business with the medium to a larger economies of scale, medium to large economies of scale, businesses, those who want to invest or seeking finance rather. Now, what about the establishment of a kind of a venture capital department where the lady or the man in the rural area that wishes to start a little business, whether it's a poultry business, whether it's selling of chips, whether it's opening a spaza shop, but what about, or whether it's going into perhaps becoming a tailor, but wanting to start a small business in the rural area. And I think that this is an area that possibly is actually lacking. But when one thinks of Professor Mohammed Yunus from, I think, Bangladesh, who looked at microcredit lending, particularly to those in the rural areas, and he said something like, lending to the poor, one should look at lending to the poor in amounts which suit them, and then teach them some basic principles, and they should be able to manage and take off from there. And he's essentially revolutionized the micro lending in Bangladesh, and has won a Nobel Prize for that. So my question is, so while we have the NEF and the IDC, which to a large extent focuses on your bigger the bigger ideas and these large economies of scale, but what about some kind of venture capital, some kind of support, financial support, micro loans to those in the rural areas? And that's to the NRC. Thank you, Chair.
Thank you very much. Number 2.
No, thank you very much, Chair. This is Honorable Msezane on the mic. Chair, perhaps before my first question, which would be slightly aligned to the question by Honorable Train, I think I'm just asking myself from the top of my head, and this would probably be a rhetorical question if it doesn't fit this platform, but I'm really interested in knowing why does it get to a point where municipalities get themselves so indebted? I mean, of course, they get funding from a number of departments to fund their projects. Why is it that we have this situation now that we are dealing with, where municipalities are highly indebted? But that's just from the top of my head. If I could, in a relevant platform or time, just get that insight so that I actually understand it. But my first question, nonetheless, Chair, relates to what is the plan to address municipalities with low credit worthiness that are excluded from private financing due to high risk premiums? The SCOFP, the coffee bill, rather, let me just phrase it like that. The coffee bill emphasizes consumer outcomes. How will this ensure accountability for banks charging excessive interest rates or fees? Then my second question, Chair, and to the presenters, given the low progress in the implementing of recommendations from the 2008 banking inquiry, as stated in the presentation, what enforcement mechanisms are being introduced to hold stakeholders accountable? And lastly, Chair, how will the Commission ensure that fintech advancements do not lead to further market concentration, further disadvantaging SMEs and HDPs? I think for now, Chair, I'll land there. Thank you very much.
Number 3. The member.
Maybe I should also commend the initiative of convening this joint meeting because it's appropriately so in the spirit of ensuring that there is collaboration within the parliament committees as they continue to strive to execute their mandate of holding government department and institutions accountable. This is a step in the right direction, and I hope we will leverage further, Chair Maswanganyi, on this particular invitation and make sure that we take full advantage of it. And let me also comment the presentations which are to me more of information sharing that has been conducted by the institutions involved. I think we are really appreciative of the information shared. Chair, you know, it's very apparent, and I think the first submission confirmed this particular assertion, that if you look at the factors that inhibit municipalities for accessing what is this borrowing facilities, it's clear that this is something that is worse as we speak. And what I wanted to check with the presenter, how this the rate of borrowing currently affects municipalities, because municipalities, because of the pure performance of the economy, and of course the stress that is experienced by various households, their rates of revenue generation is very, very minimal, if not non-existent. So I'm not sure currently what are the patterns, because that didn't come out clearly in the presentation of the status of municipal borrowing. Is it worse, or maybe is it improving? I doubt if it is improving. But also, can the presenter, because there is a call now, and this is a perennial call that has been mainly coming from SALGA and, of course, respective thinkers or scholars within the local government sector, that we should be looking at changing the funding model for municipalities. I'm not sure what is the take of the presenter to that, because truly speaking, if we all agree that municipalities are not ticking all the boxes for them to qualify for borrowing that is mostly needed for infrastructure development, then we should all be concerned of the economic base of each municipality, because it's clear that most of the municipality revenue base is non-existent. So I would like to hear the take of the presenter on the proposed new funding model. And coming to the COVID bill process, just to ascertain, because I think it will be important for us to make inputs into this process. How far is this process? Are we late to make submissions, or will we still have an opportunity to contribute to the COVID bill process? And also, Chair, to the Competition Commission. The Competition Commission referred to priorities of the 7th administration. Look, as a committee, and not necessarily as a committee, I think I should say as Parliament, the Parliament of the 7th administration, where we are seated, and that has been acknowledged by National Treasury, where we are seated, we don't have what we normally refer to as the medium-term development plan. And this is a summary of our 3-year projection as guided by the National Development Plan. We don't have that, and that's why we are questioning what informed the recently presented fiscal revenue, priorities and targets. Now we are hearing from the Commission that they are guided by the 7th administration priorities. I will request the Commission just to share with this joint sitting as to what's the source of those priorities, because as members of Parliament, we are struggling to identify what is informing some of these priorities and targets. Please share the information with us. That will help us a lot. And then still to the Commission, you refer to notices that you have issued with the sole intention of promoting inclusion of previously disadvantaged groupings. I don't know how effective are these notices. are they adhered to, or they are just looked at as a by the way initiative by yourselves? Can you please share with us if really these notices are effective? And then also to the Commission, I just wanted to check with the Commission. There are cases, you refer to Sekunjalo case, which is classified as a case where people are denied banking services because of reputational risk that they pose to the banking sector. I'm not sure, is this the only case or that has been referred to yourselves, or are there any other cases that the Parliament should take note of through its committees? I think that will be important to know. But also, could you please indicate if, because we hear from some of our constituents that they are being victimized by banks on the basis of their race. So I'm not sure how many racial discrimination practices has been brought to your attention as experienced by our people within the banking sector. And then also, how have you dealt with such cases? Are you able to share with us the outcomes of such cases? And generally, Chair, I think there is one thing that I would want to ask from all the presenters. We keep talking about the good work that you are doing, but in the main, it seems to be more of a status quo approach, which is not necessarily meaning one is not appreciative of the efforts that you are investing in executing your mandate. But I wanted you to maybe thinking out of the box. Are you able to, yes, I'm concluding now, this is the last one. Are you able to take us in confidence as Congo? What more should we do, to get our developmental agenda back into its course? Is there anything that you might want to share with us outside your normal mandate as outlined per your, appointments? I think you have enough experience to share with us as to what is it that you think we are not doing right, because some of the things that you are trying to do have not yielded as expected. Thank you, Chair.
Thank you, Member Des. Member Beasley. And then Member Beasley, you'll be followed by a Member Chance, and Member Chance will be followed by Member Umpile. Thank you.
Thanks. Greeting, Chair, and all colleagues on the platform, and your presenters and staff. So just to National Treasury, the first question is, does Treasury sign off on municipal loans? Do the municipalities have to get approval from Treasury? And the reason why I'm asking that is just to make sure that there is a governance level over loans made, because if we enter into long-term loans and they're bad loans, it could have a huge impact on the residents for numerous of years. And then to the NCR, is there not a duplication of roles between yourself and the FSCA? And with the duplication of roles, there's a duplication of costs. And I just think there is confusion out there. And then also to the NCR, are they not concerned that there's an over-regulation of the credit market? I think, from Action SA's perspective, we just think that this market is just so over-regulated, and because it's over-regulated, it's actually defeating the object, and it's preventing new entrants and preventing loans being made because of the over-regulation. So I'd just like a comment on that. Are we not over-regulating it, and as a result, we're having bad outcomes as opposed to good outcomes? And then I fully agree with Honourable Thring. I think one of the ways we have to get this economy going is getting loans available to SMEs. I think there's just too much focus on big businesses and SMEs. We need to find a way for SMEs to be able to access credit, because I think SMEs are going to be the engine that get this inclusive growth going. So we need to find a way where we can get access of capital to SMEs. Thank you, Chair.
That's so short. Member Chance?
Yeah, thank you very much, Chair, and good morning to everybody. And thank you for setting this up. Somebody's speaking that shouldn't be speaking. Anyway, yeah, it's a pity actually that that members of the committees from COCTA and Small Business Development and even Basic Education are not here, because it seems that much of what was presented this morning is actually more relevant to them than it is to the DTIC per se, although much of what was presented does have a peripheral connection to what the DTIC is doing. But let me just start off by asking the question, in terms of municipal loans, what is the quantum of loans that is outstanding at the moment, and what is the default rate? Because with the dire financial state of many of the municipalities, I would imagine that many of them are distressed. And is there a system which is equivalent in the private sector to business rescue? What is happening? And is that simply something that Treasury is doing through intervening? Then the next question is in terms of the coffee bill and the Twin Peaks, which has been replicated in many countries around the world. Is the coffee bill itself modeled on something that has been done overseas by other countries, or is this something that has emerged from you as a regulatory body without any consultation with other countries? Then the next question is, what actually is meant by developmental finance? Are there some definitions of developmental finance in terms of, for example, the interest rate charged, the term of the interest or the term of the loan, whether deposits are required, whether they're asset backed? So I'd just like to get some information on that, if I may. Then the question on the database. I think this is a very important point, credit information database. And again, this is something which needs collaboration across departments, and particularly the DSBD would find this very interesting, because much of the reasons for small businesses not getting loans is because they don't have a credit record. So any information that can be gathered around that would be most helpful to all institutions that are in the lending space. Turning to the Competition Commission, my own view is that the Forex cartel accusations are really just a fishing expedition, and they've been discredited by most people, not just the accused banks. And as far as I'm aware, only Standard Chartered Bank has paid the penalty without accepting liability. I think that that's just something which the Competition Commission should just back off from. Okay, they can't now because it's in the Constitutional Court, but it just seems to me an example of overreach by the Competition Commission. And again, talking of overreach, if we look at the mergers between 2010 and 2024, in 2010, only 2% of mergers were referred and approved with conditions. In 2024, 50% of mergers were approved with conditions. And what that means is that the Competition Commission is burrowing into the terms of these mergers, making it even more complicated, time-consuming, regulatory overload, and surely there should be some understanding or recognition by the Competition Commission that its job is to improve competition in this country through particularly focusing on concentrated markets rather than focusing on mergers, which can have a beneficial effect. And I think in particular of the the Vodacom acquisition of Maziv or Vumatel, which has been denied. And again, this has come in for huge criticism, not only because of the decision itself, but also because it took 2.5 years to adjudicate. And the average time that it takes for adjudications now is 2.5 years, which is just impossible for businesses to endure. So I'd like to ask the Competition Commission if it recognizes that these obstacles to economic development and growth are something that it needs to attend to, and what measures is it taking to speed up the adjudication time of these competition merger inquiries. Thank you, Chair.
It was Member Sikwalti and then Member Umphile. Member Sikwalti, are you still here? Member Umphile?
I'm here, Chair. Greetings to you and greetings to everybody on the
Please
platform.
We'll recognize the member once he's properly connected. You can continue.
Okay, thank you, Chair. Once again, greetings to your good self, greetings to fellow honorable members, and greetings to everybody who's online. Chair, I won't be long. Most of my questions are covered, but I just wanted to go back to the issue of banks closing their accounts. So when I go to the bank and open an account, I don't remember being inducted or being given something that would say, if you cross these lines, then your account will have to be reviewed and your account might be closed down. So what leads to that? What informs the closing of accounts? And what steps does the bank take before that crucial act of ultimately closing that account? Because it's problematic, Chair, in a sense, because we tend to see the bank being used to fight other battles. So perhaps we can be educated on what is it and who does the bank consult in that process, and what can National Treasury do to avoid such things happening. That's one. Number two, Chair, is on the bank charges. You know, I was talking to someone yesterday and I'm like, I'm just being charged 420 rands a month for just banking with this bank. And you can imagine, I mean, how many of us are banking with the bank on a monthly basis consistently. But who regulates these charges? Who decides this time around we're increasing the bank charges by 2%, by 3%? Who regulates this? And what informs this exorbitant amounts? 420 rands is a lot of money in this economy that is failing. And multiplied by the number of customers or clients that banks have on a monthly basis for just doing nothing but just banking with the bank. You have not done any transaction. You're just banking. Every transaction you do, you still pay more. But this one you pay just for the bank keeping your money. So it's very interesting to know. Chair, the other issue is this racial discrimination. We've seen it in the news. I mean, and I think there's a lawsuit that is coming, if it's not already there, of this racial discrimination. Africans, Black people being charged high interest rates compared to other races. What is the response from the banks? Why is this happening? And whether this is true and what leads to this? And the last one, Chair, is on the bond repayments. And I'm not asking this to say people must be reckless, but Chair, you buy a house, you enter into a contract with the bank to say, I'm going to repay it in 30 years or 20 years, whatever the case may be. And you pay for a good 19 years or 25 years. You're left with only 5 years. And we do know that throughout the years, you've been paying, and possibly you've even paid, you finished paying your initial principal amount. But what is left now is just the interest. Then you lose your job. The economy is not doing well. People are losing jobs. And then the bank comes and takes your house and auction it for a fraction of the cost. How can that be stopped? Because that is wrong. That also borders on, we know that we come from a previously disadvantaged as Africans, as Blacks. And then the banks, we don't own anything. The very thing that should, give you purpose for life, which is owning a property, just putting a roof over your head and your kids, then the bank comes and takes it after you've paid for so many years. That is very wrong, Chair. What are we doing about it? Because it has to change. That is not even a question to the banks. That should be stopped. We should have a regulation that stops the banks from doing that, because they've already recovered their money. And now you are losing out on something that you've worked for life. Because, Chair, you would have lost 30 years of your life. Possibly that time you are 50 or you are 60 years. Where are you still going to get a job? Who's going to give you a house at 60 years that you must pay for 30 years? No bank will give you that loan. So this is very problematic, and we need to resolve it, Chair. That will be all from my side. Thank you.
Member Squati, are you there? Thank you very much, colleagues. And then we are moving at a very good pace. Are there any comments, Honorable Co-Chairperson, on your side, so that I can also make my comments and then allow the team to respond? Honorable Masongane. Okay, we'll also come back to him as soon as he has connected. I would like to add my questions with regard to the coffee bill, to check whether or not it could be shared with members of the two committees and probably any other committee of interest. We would like to have a look so that we can be certain, because it appears that some of the issues that we have been raising potentially could be covered there, but we can only say so concretely once we have received the actual draft bill, and then we're able to move forward. The second thing is that it's very clear that in the credit environment of 2.4 trillion, only 3% going for development, that fundamentally something is wrong. And whereas when we're told that actually this is covered by NSFAS, so meaning that there are no attempts. We've not been able to put sets of legislations in place to ensure that we can push productive credit other than the consumption credit, which has been the problem in South Africa. So I think really this is one area that we need to be doing well. The non-bank who gives loans, how do we monitor their conduct and what rules are applied to them so that we are very, very clear? Now, Honorable Member Umpile asked this critical question about the banks and so on. So we all know that at the time when you are looking for credit, you are very desperate. And then all of us know that there's a small print there in the bank. When they say, no, you have been approved, nobody wants to read that thing. And that's where the devil of the detail is. And many a times, that's where the challenges, emanates from. And we've not been able to really make this print, if it's genuine, big enough for people to have an opportunity to read. But secondly, make it standardized across all the financial institutions wherever possible, so that we can know what we are dealing with in the main. Now, I wanted to ask also the Competition Commission what could be done for the realignment, because presenting a work of 2006 when you had no authority over remedial action it just becomes an academic exercise, because those recommendations, nobody is under any obligation to fulfill them. I want to ask a direct question: what could be done to realign those things? Because many of the things that you had recommended in 2006 are as relevant as they are in 2024, except that they are not legally binding. What could be done to have an alignment with regard to that? The other issue is on the practice notes, as said here. I want to understand how binding are these and who monitors them, so that we are able to be clearer with regard to the issues. There is an issue, Competition Commission, where, for instance, most of the honorable members of Parliament are classified as politically exposed individuals. Bank are circumspect in dealing with, in opening just a simple bank account. I can give you a practical account with one bank, where I went to open a bank account so that there could be synergy between my children's bank details and mine, and I'm able to give them the allowance. I was denied opening an account, and there is so many of those countless instances, and we want to know who decides and what is the criteria for people to be exposed like this? Because there are many instances where there are a lot of officials who, who are doing wrong things and are not classified. They continue to open and close bank accounts willy-nilly, whereas a section of the society is now being isolated and is not given an opportunity to to do its work. My final question is, in the three measures that you have done, if you look back in 1999, we had that demutualization that happened of the old mutual, and the proceed from that assisted government to capitalize NEF. I want to know what is there a thinking, or was there a thinking when you were encouraging the measures of the three banks of what could become a fund for development in the main? I will now allow the three institutions at least 10 minutes each, and those things that you can't answer now that requires more information from your technical team, you are allowed that in 5 days you write it, and then you can come back. There are 2 members that were appointed, but I'm sure due to network they are not here. If we still have sufficient time, as I think we should, we will also give them as well as the second round. So over to you, the way in which you presented first, the National Treasury, NCR, as well as the Commission. Thank you very much.
Thank you, Chair.
Okay.
I will start with coffee bill related questions. Sipati will add, and then we'll hand over to our intergov relations colleagues to respond to the municipalities related questions. So with respect to input into the coffee bill process by Honorable Van Rooyen, so we are currently revising the coffee bill. This revised coffee bill will be sent to Parliament. It will be tabled in Parliament. We are hoping first or second quarter next year. But prior to that, we will need to obtain Cabinet approval. So members will be afforded an opportunity to provide input into the coffee bill. Then with respect to possible duplication of roles between the NCA and the coffee bill, we have tried as much as we possibly can to ensure that there is no duplication either of roles or responsibilities. So the coffee bill delineates the regulatory and supervisory powers between the NCR and the FSCA. It also largely facilitates collaboration and coordination between the two institutions to avoid duplication. When it comes to the regulation of the provision of credit, we also recognize in the law, in the bill, the NCR as another regulator. So with respect to Honorable Chance's question, Honorable Mzwandile's question on sharing the coffee bill, yes, we will share the bill once it's gotten approval from Cabinet to table the bill in Parliament. It will be circulated.
You are muted.
I think she's lost connection. So if I may continue with some of the questions related to the coffee bill, this is Sipati Kondela from National Treasury. So I'm going to be responding to the question relating to the Twin Peaks framework. So the Twin Peaks framework, when it was still being envisaged, there were comparisons that were done in terms of countries such as the UK, Australia, and so on, where it was implemented. But the crucial driver behind the Twin Peaks reform was really to the need for a stronger market conduct regulation, so that the financial sector produces better outcomes
and treats customers more fairly. And then in respect of the coffee bill, the coffee bill is a bit is more nuanced to the South African environment. And what it aims to solve for is that there are currently a number of different financial sector laws, and this causes fragmentation in terms of the regulatory requirements. It creates regulatory arbitrage, a silo approach to regulation, and as we indicated in the presentation, a somewhat of a compliance focus, tick box regulatory focus. And this has in some ways contributed to poor customer outcomes in the financial sector, where in some instances while it's not the spirit of the law that is followed, but rather the letter of the law. So what the coffee bill aims to do is to create a single law for market conduct regulation of all financial institutions. So this, as we've mentioned in the presentation as well, that this would provide for a consistent activity-based proportionate approach to conduct regulation and ensuring that we achieve the proper or positive consumer outcomes. And just also to add in terms of, so the FSCA has the treating customers fairly principles, which talk to, what Honorable Masina was talking to in terms of issues of disclosure requirements, where customers need to be, one of those outcomes is that customers need to be provided with clear information and be kept appropriately informed before, during, and at point of sale. So, and also in terms of the NCR, the NCA requirements, they also deal with issues that are related to disclosure requirements, and that mandates credit providers to disclose the cost of credit, including the interest rates, fees, and repayment terms in a clear and understandable manner. So both, as we mentioned, both regulators touch on conduct issues. So at the coffee bill level, there will be collaboration and coordination between the regulators, as is already happening, to ensure that we minimize what you call it, the regulatory burden. So thank you very much, Chair.
Can I go, Chair? This is Sandra, also from National Treasury. Chairperson, can I continue responding on the questions about municipalities?
Yes, Sandra.
Okay, so we have prepared in our presentation, there's a slide in annexures. I wonder if somebody can be able to share just after a thank you. There's two slides on the long-term debt for municipalities. Towards the end. Yes, that slide, please. If you can put it in a presentation, yes. Okay, just to start, Honorable Chairperson, there's National Treasury reports on the municipal borrowing every quarter. There's a municipal borrowing bulletin that we have and publish in the National Treasury website, where we track the borrowing for municipalities. So currently the outstanding long-term debt in municipalities is around 70 billion. And most of this debt is taken by metros, as you can see in the table here. And 10% of it is actually taken by the secondary cities municipalities, which is 19 municipalities, and 4% in other local municipalities. And there's a little outstanding debt for the district municipalities. So I have recorded around questions that are actually related to municipalities, but most of them are linked. So I will start, and Wayne, my colleague, will also add. So with regards to why municipalities are highly indebted, so there are a few problems in the municipalities. Firstly is the collection rate. So municipalities are not able to collect what is due to them. They have credit control policies, but most of them, they're not implementing them. But the other issue that is connected to the collection rate is that the tariffs are not cost reflective, meaning that they spend more money in the cost of providing the service than in collecting the revenue from that services. And there is, as we know, there is this other bigger problem, which is municipalities that are owing, like your ESCOM and your water boards. So meaning that they can't honor their obligations. So this thing becomes a thing of many years, and municipalities end up owing sort of billions of rents to these institutions. But on the other hand, also, there are institutions, businesses, and even households that are owing municipalities, and municipalities have not yet started collecting from those. The Treasury also, there's information that we can also sort of send to show how much is municipalities owed by government departments, and how much is business owing municipalities, and how much is a household owing municipalities. So that is the question around the highly indebted. There's also a question about there's a question about whether a treasury is approving the loans that municipalities received, and it's not, treasury doesn't approve, they give opinion, but I think Wayne will also add on that. So I will give to Wayne to also add on the questions that were raised.
Thank you, Sandra, and good morning to Honorable Chairperson, committee members, and fellow colleagues. It's Mr. McCommons here from National Treasury. Just to maybe add to the last response Sandra has given, is that if you look at the Municipal Finance Management Act, section number 46, you will see that the National Treasury's role when it comes to municipal loans is limited to providing an input or recommendation in relation to a particular proposal that the municipality has received. And that input or recommendation is inclusive of a financial assessment around the affordability of the loan for the municipality, taking into account the financial position at a particular point in time. So it's therefore limited to giving input or recommendations. Ultimately, the municipal council is responsible for making a resolution around whether or not they will entertain the loan in terms of accepting it or not. It is something that we are looking at in terms of whether that role is sufficient for National Treasury. And as you would know, as you will be aware, the National Treasury is currently reviewing the Municipal Finance Management Act, and we will soon be consulting on a particular draft amendment bill. And one of the things we're looking at is to see how the Treasury's role can be strengthened in this regard. I do think that we will have a very big constitutional impediment around that, because our laws are very clear around the role of the council when it comes to loans. I think it's something that we will be engaging on as a National Treasury and seeing how we can strengthen our role on the municipal loans part. Honorable Chair, there was a question also around the remedies available to municipalities on distress. I hope I understood the context correctly, but I will respond and you let me know whether I misunderstood the context. So if you look at the design of the Municipal Finance Management Act, there's a chapter towards the end of the Act that's called chapter number 13, and it deals with what is called the Municipal Financial Recovery Services. Now, those policies are not part of our delegation today, but we've got a separate unit inside the National Treasury that speaks to or that deals with municipalities who are in financial distress. And what they do there is the development of what is called a municipal or Financial Recovery Plan, abbreviated as FRP. And that's a plan that seeks to get a municipality out of so-called being distressed to a point where it can be said that the municipality is financially stable. So it very clearly outlines, outlines what should happen. I think inclusive in the process is the municipality approaching the courts to, in a way, get some temporary relief in terms of staying any legal proceedings against it to enable it to get this plan I'm referring to in place. So it's quite very well structured process, and many municipalities recently voluntarily engaged in the National Treasury to assist them with the development of these plans, because they are beginning to see through their own internal control environment when they are about to move towards the ICU. So yeah, I think that question also is linked to the question asked by one of the members around do we have a system similar to business rescue? And this is a system that I think in a way mirrors business rescue. And we have to link the system also with section 139 of the Constitution that allows the provincial government or when they fail, the national government to intervene in a municipality. And is that system, Honorable Chairperson, that I think in a way similarly mirrors a business rescue, where in some instances a municipal council can be dissolved and an administrator appointed to support a municipality to get towards a point where they are financially stable or even stable from a governance perspective. There was a question around the local government funding model. Chair, I think as a government, we've reached a point where there's broad consensus that the assumptions made in 1998 in the white paper local government is no more relevant in 2024, Chairperson. And that is why amongst many of the policy reviews that are currently happening in local government space, the white paper review, Chair, is one of those key policy documents that are being reviewed to assess the question, what is broken that we have to fix, okay? And that process, Chair, is led by the Department of Corporate Governance and as National Treasury, who are supporting it. And inclusive, Chair, of the review that is done on white paper, Chair, is the funding model, okay? So that work, Chair, is still pretty much in its infancy stage, but I'm sure once there is something more appropriate on the table from a proposal perspective, there will be consultation, Chair, much more broader around how the funding model will have to change in the event where there's consensus, Chairperson, that the funding model has to change. And lastly, on my side, Chair, there was a question asked around default rates. I think, Sandra, if my memory is correct, we've never had any municipality chairperson in the country that has defaulted on their loans obligations, solely because the Municipal Finance Management Act has a model in place that supports municipalities in the event where they can see that they're moving towards financial difficulty, which can include also moving towards a situation where they were reneged on their loan obligations. Thank you, Chairperson.
Thank you very much, NCR.
Thank you. Sorry, Ntebang. Just as an introduction, I would just introduce my team again. Before I do that, on one aspect, I think we need to just linger a little bit longer to say what is the role of the NCA, and perhaps focus there would be for us to look at the consumer protection role. And in that sense, where we have a legislative piece that talks about principles and not the real or the principles versus rules, it's often in the principles that we get the cases that need to be taken to law for clarity. So in that case, it's mostly consumers may not have, the right or the funding to take on big banks, etc. So I think it is important that the NCR is that maybe thought of as prescriptive in the environment, but those rules and regulations do protect those consumers that are not able to take care of themselves and not able to have the funds to do that. So I think it's important that we do mention that as from that questions that came from the table. And in relation to developmental credit, I think we have a number of things that we are currently actually doing that may not be in an advanced stage yet, so that we can share that with you. But I'm going to ask, there were several questions on enforcement as well. So I'm just going to hand over to the expert in the NCR, Mintupang Mahulego. She's going to take you through most of those questions, if you don't mind. Thank you.
Thank you, CEO, and good morning, honorable members. The first question that I will address is on the enforcement powers of the NCR when there is a violation of the Act. In terms of the National Credit Act, whenever there is a violation of the provisions of the Act, we are able to refer matters to the National Consumer Tribunal for various orders, such as imposition of administrative fines. In some instances, we're able to request the National Consumer Tribunal to cancel a license of an entity that has violated the provisions of the National Credit Act. Closer to consumers, in terms of redress, we do have a complaints department that seeks to provide redress to consumers who have been prejudiced by the conduct of any of our registrants, including credit providers. And what you are seeing in this complaints department is that we're able to obtain refunds for consumers who have been overcharged by credit providers, for example. So those are the powers that have been given to the National Credit Regulator whenever there is a violation of the provisions of the Act. On the question of the low uptake of developmental credit, in our engagement with the industry, what became issues that were identified as possible impediments of access to developmental credit were firstly the lack of data at the credit bureaus for SMMEs, where credit providers can use the data to assess the risk in order to provide loans to SMMEs for developmental credit. And in that regard, the NCR is currently working on a project where the objective is to come up with a framework that will ensure that data that will assist credit providers to assess the risk of SMMEs is loaded with credit bureaus so that credit bureaus can in turn share the data with credit providers for them to be able to assess the risk before they can provide the loan. The second issue that has been brought to our attention is that some credit providers were saying most of the SMMEs do not have assets that they can provide as security for loans. Most of the time, credit providers will require security for loans. And in that regard, the NCR is supporting a project that is led by the Department of Small Businesses, where the intention is to come up with a framework for the use of movable assets as security for access to credit. Our belief is that once those two structural impediments have been addressed, we expect to see a higher uptake of developmental credit. In addition to the structural impediments, it was mentioned by CEO that the National Credit Act itself requires some amendments to make it more easy for the uptake of developmental credit. On the question of the over-regulation of the credit space, I think all of us, we know the National Credit Act has been lauded as one of the legislation that has protected our country from the 2008 recession. And indeed, to support that view, currently the NCR is constantly hosting several countries that seeks to copy the National Credit Act or to introduce the National Credit Act into their financial sector regulatory framework. So our position is that we believe that the sector is not over-regulated when it comes to credit. I think to a certain extent also, Member Messina has mentioned that credit by its nature is consumed by consumers who are desperate. So we do require stringent rules to be able to balance the negotiation scales. If we are not going to have stringent rules, the negotiation scales between credit providers and consumers is going to be skewed in favor of credit providers. So indeed, unlike the other financial services, credit, because of the nature of the consumers who want these financial services, mostly desperate, it is important that there are stringent rules that others may view as over-regulation, but indeed the intention of these rules is to ensure that we can balance the negotiation scales between consumers and credit providers, especially the previously disadvantaged consumers. On the question of the high rates of interest for Black people, the NCR is working currently jointly with the FSCA, looking into this particular matter where we're conducting a supervision over one credit provider that has been accused of this conduct. But in addition to that, we do have a project underway where we want to render credit scores explainable. This is because we are aware that most consumers believe that the uncertainties that are behind the credit scores could be the reasons why they're getting high interest rates. So as the NCR, we're working, supported by the International Finance Corporation, to try and render credit scores explainable so that any consumer can understand the variables that goes into a score that they get from credit bureaus, because most credit providers rely on this credit score to price for credit. So we have a few work in progress that we hopefully will assist us in addressing this issue. On the question of the venture capital issue, from our point of view, how we see it is that we currently have several credit providers that are classified as developmental finance institutions, whose main objectives really is to provide credit to the poor, including SMMEs that are not ordinarily able to get credit from banks. So there is a model of some sort that can be seen as venture capital from our point of view, where we have this developmental finance institution that caters for the poor. Indeed, we can support this further with the review of the National Credit Act, as it was mentioned by CEO in one of the slides, that there are some impediments in the legislation itself that could be making it difficult for some of these developmental finance institutions to really participate more fully in this sector. On the question of how we monitor non-banks, we monitor non-banks the same way, if not closely or more stringently as we monitor everyone else. We do have a compliance department that proactively looks into the compliance status of all our credit providers, and we do conduct investigations in some instances together with the support of the police, where the intention is to ensure that the non-banks credit provider also comply with the provisions of the National Credit Act. On the last question of the standardization of credit agreements, that is already part of the National Credit Act. The National Credit Act has forms, standard forms for credit agreements. So credit providers are expected to use the standard forms that are in the National Credit Act when they conclude credit agreements with consumers. And we actually even have provisions where consumers can choose the language that is possible for the credit providers to conclude a credit agreement with them. So the purpose of these forms was indeed to ensure that there's transparency in terms of the terms of a credit agreement and that there's standardization. We are aware of some of the issues like using small print for some of the provisions in the in the credit agreement, and perhaps this is an area that can be improved through legislative changes. So just to summarize, the credit space from our point of view is not over-regulated. The improvement that could perhaps be provided is to allow the NCR to have certain powers, such as the powers to issue binding directives, because as it stands now, the National Credit Act is almost 20 years old. There were some amendments, but not as comprehensive as we would like them to be. And as a result, the Act has been overtaken by the changes in the credit space. And this can easily be addressed if the NCR can be given powers to issue directives. Whenever there's a new conduct that we pick up, we can quickly then issue directives to manage a certain conduct. Thank you.
Thank you very much. Is it all from NCR? Can we then proceed to Competition Commission?
Chairperson, if I may, Chair?
Yes.
Chair, there is a request that presenters switch on the camera because the meeting is broadcast. So if they can just comply with that request from our broadcasters, Chair. Thanks.
Thank you very much. We were not aware. Please, members, if you can assist. Over to you, Commissioner.
Sorry, Chair. It's Makumaliva from the NCR. If I could just deal with the issue of declining trends in the developmental credit space. I think there's a member that alluded to the declining extension of credit that as witnessed in the latest quarter of June 2024. I don't know if you are able to see me. If my camera is on in line with the instructions that were just provided. Are you able to see me, colleagues?
Yes, you can proceed. We can see you.
All right, thank you very much. I just wanted to point out that from a stock point of view, the book has been increasing annually at a rate of about 4% on developmental credit. Even, I would say, providers like NSFAS, which have essentially stopped doing credit extension, have been charging interest, and as a result, there's general growth in the book. And on the issue of, I would say, providing broad definition relating to developmental credit, it applies to small business, it applies to low-income housing. The costs in that regard are kept with regards to interest at 27% plus the repo rate, in a sense. And the initiation fees are charged at a maximum of about 2,600 with a monthly service fee of about 67 Rand. So yeah, I think in a sense that should define developmental credit and where it is applicable, largely on developmental housing, on developmental business, and on educational loans as well. I hope that clarifies the query. Thank you very much.
Thank you very much, Honourable Chair of both committees. That was the presentation from the NCR. We are completed. Thank you very much.
Good day, Chair. It's Doris here. Chair, there were a number of questions that were raised for the Commission. Just the first one from Honourable String on the rand. That is the case, Chair. I think we called it the Forex case. I spoke about it. just to remind the committee chair that in respect of that case, we do have a leniency applicant. It's a whistleblower type, and that's Barclays Bank and ABSA. And we had two banks that then settled with the commission, and that's Citibank and Standard Chartered Bank. So you are right. Those three banks have agreed, the one as a whistleblower and the other two as have agreed to settle with the commission. And as we've said, indicating that there is a that they are admitting to the conduct. So the matter is not finalized yet, Honorable Tring. As I said, it is currently before the Constitutional Court, the Constitutional Court having issued some directives to the parties, and we will, and the hearing date is still to be determined. So that is still in place. Then the second one relates to the questions from Member Msezane. And I think here, Chair, one of the questions Honorable Msezane asked is similar to the one you raised, or at least the premise of it, and that is about the recommendations of the banking inquiry in 2008. Chair, although those were recommendations, I just wanted to clarify that they were in the main implemented alongside with the other regulators, as I've said. So and I don't want to come across as if we're saying those were not implemented. They were. But the point we're making is that we are still seeing, as I said in the slide on conduct, that there are still some complaints we are seeing. And then to just come to the next point of Member Msezana's question is, we then deal with them as enforcement cases, and you would have seen those three on conduct that we would have non-referred those that come, and referred the ones that have a, for example, the charges one, we would have referred to the Financial Service Conduct Authority, or ones that we're dealing with them through advocacy work with the various regulators in the sector. As I said, Chair, it is a heavily regulated sector, and so we try through the advocacy role that we have, where we don't have jurisdiction to enforce, to engage with those regulators to ensure that there is some advocacy resolution of those cases. The other one, and it links to one of the questions that Honorable Van Rooyen raised in relation to practice notes, and you've raised it as well, Chair, is so through our advocacy and through the Act, we have powers to issue practice notes or guidelines. Although those are not binding, we find that on most instances, market participants do comply with them. And where they don't, we do receive complaints, including the one complaint that you're seeing in that slide, Chair, on the panel of banks and insurers. And when those happen, Chair, we do engage with the banks to ensure that those practice notes are complied with. And we normally find that there is a proper compliance. And where there is, we engage, we monitor, and we get we publish those practice notes, so that where members of the public are of the view that there is no compliance, that they inform us and we engage with them. That one case, Chair, you would have seen where a conveyancer would have complained about not being included in a panel, we would engage with those banks to understand the basis upon which they are not included, so that we remove whatever barriers to entry that may be in relation to criteria that they may want that may not be necessary or may indirectly be exclusionary in any way. So I just thought to deal with that in that way. In relation to fintech, and Honorable Member Msezana is right. I think, and I said this in my presentation, I think fintech has the potential to reduce concentration as new tech firms target more efficient and data-driven financial services. And we've seen the benefits of new fintech banks that have come in here, and also some of the payment services that have come into the industry. So the main concern is for the working group, the fintech working group, to ensure that banks do not provide hindrances for the emergence of these fintech services. So that we can promote some solutions that come here. And that's where that example on screen scraping may be an example where if the banks do not allow for interoperability, then screen scraping is necessary. So we need to make sure that we have some fair processes that we introduce into the fintech industry to ensure that we get more competition, and that competition is more effective. And hence our participation, Chair, in that fintech working group that we participate on, and there will be a report that comes out with all the regulators in 2025. Chair, then to some of the questions that were raised by Member Van Rooyen that I have not covered. The one in relation to priorities, those priorities are the priorities from the DTIC that they would have informed us. But I think perhaps what is relevant for us, Chair, through you, is that we are looking at our mandate, and in that mandate you will have the mandate that is in terms of the Competition Act is about inclusive growth. It's about protection of jobs. It's about allowing markets to be more competitive. The public interest components of our mandate in the Act. And broadly, as a public entity bound by the PFMA to have a capable state. So what we were trying to show is these are the mandates of the Competition Commission that relates to the priorities of the current administration. I have, Chair, spoken to notices and whether they are adhered to and who monitors them. And that was one of the questions Honorable Van Rooyen had raised. On the Sekunjalo case, Chair, just to say, this is a complaint that we have received, and we are investigating that complaint. I'm not aware of any other complaint, Chair, where banks have closed bank accounts of consumers with allegation of contravention of the Competition Act. This is the only one we have. And in relation to the other issues on exclusion, I think it's about that practice note where we help for SMEs and HDP to participate within panels, Chair. And so that's how we engage on that. Chair, then on member Chance's, my apologies, Honourable Chance's questions on M&As. Chair, as I stated, we are required to comply with the Act. And the Act, when we regulate measures, we are required to look at the measures on two fronts, on competition concerns and on public interest concerns. And so when we assess a measure and we make a decision, those are the assessments we look at. And so a measure, if it doesn't raise any competition issues and doesn't raise any public interest issues, that measure will be approved or recommended to the tribunal to approve it without conditions. Where it raises concerns, either of a competition nature, but those concerns can be remedied through some conditions, then the measure will be approved on those conditions. And ordinarily, similarly, if there are public interest concerns, the measure and there are remedies that are able to remedy those public interest concerns, then we will have those measures done approved with those conditions. And where there are no conditions that can remedy any of those concerns, then we will prohibit or recommend to the tribunal to prohibit, depending on whether it's a large measure or an intermediate measure. So that's the process, Chair. In terms of time frames, Chair, let me say first, Chair, on average, our measures, and as you know, Chair, the measures are phased. We have phase 1, phase 2, phase 3, and phase 3 can be intermediate or small or large measure. And the timelines that we have as our KPIs are then stipulated. On average, Chair, we comply with with all of these on average. There will be, Chair, cases that are more complex, and in those cases, you will find that it takes longer to finalize those cases. Our intentions, Chair, is to comply with those, and in fact, in some instances, to ensure that we don't even go above those timelines. And you will see that's why our average, even with those outliers, would still be on average below. But we do, Chair, ensure that through proper planning and processes and resource allocation internally, we ensure that we meet our turnaround times. And as Honorable Member Chan says, we acknowledge that this is turnaround times for businesses is quite key, and it's an area that there is constantly improvement to ensure that we do so within the appropriate timelines. And that's why we have that as our targets, and that's why we say whether we do comply with them or not. So there is absolutely no doubt that that issue is an issue of focus for us as a regulator, to ensure that there is ease of doing business in the country. On conditions, Chair, obviously, and Member Chance is right that there has been an increase, but it's not, I think, to the extent that Member Chance is raising. But the point, Chair, is that the conditions have increased, and they have increased in line with the amendments of the 2019. But in fact, most of them, Chair, are conditions, as I've said earlier, that we agree to with merging parties where there are concerns. And in the most, you will see, Chair, those will be employment conditions. So we do, as we do these assessments, ensure that we do it right and we do it in line with the Competition Act as we're required to do. Chair, then you asked a question on and I tried to deal with it a little bit on what to do. And I think here, Chair, I think as I said, this is a regulated sector, and engagements with the other regulators in the sector on some of the concerns that still remain in the banking sector. We should be engaging with them with a view to finding, at least from our side, a competitive environment that exists in here. The issues that are raised are, and we'd heard from the National Treasury and even from the National Credit Regulator, are wide-ranging. And I think engagement as among sectors as to what then needs to be done to ensure that some of these concerns are dealt with. And hence our engagement, even in some of these matters, that we refer back to those specific sector regulators and to prudential authority in some instances, or the SAB, become very critical to ensure that we see the kind of outcomes we desire to see in the sector, Chair. I think I have dealt with all of the questions, Chair, and I hope that's fine. Thank you very much, Chair.
Thank you very much. We really have tried to cover as many issues as possible to really tackle this subject, and I think that the information is helpful, especially for the next step. So I would now like to invite the Chair, Dr. Maswanganye, to give his concluding remarks. And, I've been deliberating. So I think that if there are any other questions that have not been sufficiently answered, we will encourage the team to just put those in writing and then send them through. I now hand over to Dr. Maswanganye.
Thank you, Chairperson, Honorable Masina, and colleagues. Let me also thank you for initiating this joint committee that we are having today to process very critical issues. They are critical in the sense that they affect municipalities who are at the coalface of service delivery. Local government is not a competency of one portfolio or a standing committee of parliament. It is a transversal competency because it intersects various committees of parliament. So you can't say that is a matter that is the only competency of Cooperative Governance and Traditional Affairs Portfolio Committee only. It has got issues of finance. Finance committees have to deal with it, service delivery, and a whole range of many other related matters. The state of local government is worrying, Chairperson. Whilst there have been some welcome improvement in the number of municipalities, we still have problems of many municipalities that are owing workers' salaries. There has been a rise in the number of defaulting on pension fund payments. This coming week on Tuesday, SCOF will be having a meeting with FSCA and the pension fund adjudicator. We have received lots of complaints from workers, both from private and the public sector. And the public sector in the main is local government. When the two-pot system retirement system was activated on the 1st of September. Some municipal workers approached the employer to withdraw a portion from their retirement savings, only to find that there's no money. And here's somebody who has been working there for the maybe past 30 or 40 years. He or she is about to retire, only to be told that there's no money for retirement. I mean, it's as much as you are announcing a death sentence to that person. So we are very worried about the state of municipalities. We'll get a full report on Tuesday and we'll share it with you. The overall financial health of municipalities is deeply concerning, with many failing to provide basic services to communities and businesses. So we have to do something about it. If you look at the reports that have been issued by the Auditor General on the MFMA or on local government, more than half of municipalities, 52% and above, owe their creditors more money than they have available in the bank as they continue to spend the money, which they also don't have. So it's worrisome because this comes from the Auditor General, who have done extensive work on auditing municipalities. Something has to be done about this problem. So at the end, municipal consumers, who are the ratepayers, are also not paying what they owe to municipalities, including government departments. So you have got the Department of Public Works in municipalities, which is supposed to coordinate the payment of services for all government departments, and it's not doing so. And that leaves municipalities with lots of money that is being owed by state department. So we sometimes blame municipalities for problems that are caused by the two spheres of government. And we have to come hard on the two spheres of the government that are owing municipalities a lot of money. In conclusion, Chair, let me say that the issue of financial sector transformation is quite very, very important. The credit, I mean, the Competition Commission, FSCA, Reserve Bank, and others can go to a particular extent in monitoring banks and financial institutions in general, be it insurance, asset managers, there are many. But what is key, that is something that we have to do it ourselves as a parliament, is to take forward the decision that has been taken by parliament in the 5th administration, if I'm not mistaken. I think you were still here, Chairperson, before you became executive mayor. The Parliament of the Republic of South Africa has taken a resolution or made a resolution on the financial sector transformation policy. What we did in the last term or last parliament, we convened a meeting before the building was burned at what used to be called Old Assembly Hall. We met NEDLEC, National Treasury, I think the Banking Association was there. And it was agreed that a summit should be convened to discuss the policy and take it forward. So what I think we have to do, we can convene another meeting, time permitting. I doubt this year, because I've looked at the program of Parliament is quite very tight schedule between Monday next week and the 5th of December. It might not be possible to have another joint meeting. Probably when we come back early next year, let's have a full day meeting of these two committees to discuss the policy document that has been adopted by Parliament on the financial sector transformation. It will deal with all these issues that we are worried about that sector, because that sector is the least transformed sector of the economy. And is, if I'm not mistaken, is the biggest sector of the economy. So let's request the secretaries of the two committees to distribute that document that has been adopted by Parliament so that members can have time to study it, that by the time we come back, we will be able to make a fruitful contribution. So thanks very much for this meeting to colleagues who are in the platform. Thank all the entities that have been invited and come here and made an invaluable contribution that has been enriching to members of Parliament. Thanks very much to them, and thanks very much to the Secretariat of the two committees for convening and preparing for this meeting, PBO, and all parliamentary organs that are here in the platform, communication and media, including independent media institutions which are here. Thanks very much, Chairperson. Back to you.
Thank you very much, Co-Chairperson. We really appreciate the input, and let me also take this opportunity to appreciate the input from the National Treasury, the NCR, as well as the Competition Commission. I must say that we are seized with issues of transformation. So from time to time, we will be looking into this sector in particular, the banking and insurance sector plays a crucial role in ensuring that there's transformation in South Africa. And by all means, I think we are likely to agree that there isn't much that has happened with all the efforts that have been put. So we do need to do a bit of work in the main. Just to illustrate this point, China alone as a leading country has got not less than 4,200 banks, whereas we've got at least 17 banks here, if you don't count the 43 or so that are foreign banks. So it's important that we really broaden our thinking beyond just, especially in terms of the Competition Commission. There has been a lot of talks about the State Bank, but we have not really put efforts to ensure that they are properly anchored, properly supported, even with these huge figures from municipalities and other state entities, to ensure that we can have actually one of the banks. I think that an opportunity exists for us to expand our market, including tapping into the African continent. So we do need to have this kind of conversation so that we don't make the banks too comfortable such that they make some of these ridiculous demands they are making of willingly deciding who must own a bank account, who should not, which bank account must be closed on what account, and so on and so on. We do need to create an alternative in South Africa and ensure that the banking sector and insurance sector is open for transformation purposes. So I think that we really would like to take this opportunity to thank all the members who have contributed. And this, for me, is a very good building block so that at some point, Honorable Maswanganye and the team, when we actually invite the banks to appear before these committees, we must have done our work in terms of all the things that we think are the loopholes, and we'll make sure that we can hold them accountable. So indeed, over the next 5 years, we are going to be working very hard to ensure that there is transformation in the financial sector. With those few words, I would like to take this opportunity to thank the Secretariat, to thank members of the Portfolio Committee, to thank the support staff, members of the media, for the support they have given us. And I think that this has been an invaluable session. So the meeting is officially adjourned. Thank you very much.
Thank you, Chair.